Welcome to Trading Lounge and the European Indices. We'll cover the DAX, the FTSE and the AEX. And with the DAX here on the weekly, the count is reasonably quite simple in that we have wave 3 here, an A and a B and a C for wave 4 here, and we're looking for wave 5 up here of wave 5 here. So we're looking for 5 waves within this leg here, and we've got 1 and we've got 2 here. And then wave 3 is quite simple in terms of 1 and 2 and 3 and 4 and 5 for wave 3 here. Now, as I've probably explained before, that we can look at this as an A and a B and a C wave here, and then go straight up from here. So wave 4 can be in place here already. We can go straight up there. However, the problem that we have with this is that US markets have this is the top of wave 3 over here, okay, and many of the European markets are the same as well, but we noted that we had 5 waves up here, so we had to look at this being corrective here, here and here. So we really do need to place this wave 3 in here, which in turn, if I can just copy this here, looking for an A and a B and a C wave here. So that means that, so first of all, the takeaway here is that we could have this wave 4 in place already and would be looking for this move straight going up through here. But it's a bit hard to say that when we look at the US markets on a 4-hour chart, just because I've got it here already. We've got wave 3 top here, and we need to look at this as 1, 2, 3, 4, 5 here, and we were looking for wave B to come back to the 61.8% retracement level. There may be one little more push up here, but otherwise we'll be looking for a move to the downside from that point. I do have to say, this is the trouble with wave 4s, they're a little bit tricky. We could even go to say that this is the A wave here, the B wave pull back to the 61.50% retracement level, and then wave C in here, and also wave 4 in here as well as being completed here as an A wave, a B wave and a C wave here for wave 4. But we certainly can't go there just yet, because we've got stocks that have a very clear 5-wave structure to the downside here, like Berkshire Hathaway and a few others, Google, Alphabet rather. Currently we're looking at the situation like this, but let's just say that the 2700 here becomes the retested resistance for the S&P 500, then that will help confirm that we actually are moving down. And if we are moving down, then we would also expect this market to follow. So at this stage here, we would need to look at this move down here, this A, B and C here as just the A wave here, and then we would need to look for a B wave coming here, and then a C wave coming into this space here, and then moving up from there. So a little bit of a sort of round the bush and down the block sort of thing. So yeah, the top is different here for the DAX and some of the other markets. So on the daily chart here, we've got to remember that it's possible to have that wave 4 in low here already. Otherwise, we need to go the A, the B, and the C wave here for the A wave here. And now we're looking for the B wave up here, and down for the C. So this is our box here. The S&P 500 has already rallied to this space. This market has not, and we really need. It's a bit tricky because we really need to count each market individually in its own wave structure as an individual and independent, but at the same time we need to be inclusive of the global wave count as such as well. So it does make it a little bit tricky at times. So with the 4-hour chart here, this is where we start to split off from the S&P 500 a little bit here. So if we look at this as wave C of A here on this low here, which we basically need to do, then we need to, this move up here hasn't been very constructive. It hasn't been a perfect structure in its own right, and having this spike down here hasn't helped the situation as well. I mean, should we ignore that and have this as 1 and 2 and 3 and 4 and 5? We could count that the same as well. We could also count that as 1 and 2 here, and then 3 here and 4 here and 5 here, which kind of solves the problem a little bit. And now we would be in a corrective pattern. So this little box here is the 61.8, 50 and 60% retracement level from the bottom of here to the top of here. So it's possible that we can get an A and a B and a C wave into this box here, and then a move up into here to reach this target here. So that's a little bit different from the S&P 500 as well, because for the S&P we're expecting it to move down, but with the S&P, if I bring that back here again and go into maybe the 1 hour chart, if I've done anything here, okay, so basically what we're looking at here is that the A and the B is completed here. To help confirm this here for the S&P, we really want the 2700 here to become the retested resistance. That will be one of our triggers to the downside here. And if I've made a mistake, then we'll be going long above this high here. So that's how we're sort of treating this situation. But if the count is correct and we're coming down, so taking this into the 1 hour chart here, and sorry for making it so difficult, but it just is we're in the middle. You know, wave fours are tricky, and then we get into the B waves, which also can be really tricky as well. There's just, you know, out of the 12 different types of corrections, many of them can sort of lay out here. But not only that, we're not getting very nice structures as well. What we were getting here is we're getting impulse waves to the upside here in these trends here, and corrective waves to the downside here. But in this case here, it does appear that this is an impulse wave here. Now, the other point here that we can use is the 500 here, 5 being the second strongest number in the market, according to me. And, you know, so we need to look at this as a possible A wave here, B wave here, and 5 waves down for the C wave here. So we can look to short this, you know, this down here for day traders is doing that. We can look at that in a moment. But we wouldn't go long unless we had the 500 as support. Okay, so just bear that in mind before you go long here. And if the market moved up, and if it moved up, then we'd look for, you know, the move back up, because it's been retested here, so that means we can really go short under here. So if go long, we would need, it's gone up through here, reacted here to the supply levels, it's kicked back. We can look at that in a moment, see how far it's pulled back. But if it was going to move up here, then we would need it to basically establish itself on support here before we took a long position here for whatever reasons going up into this box. So we're not in a position to go long here. We're on this side of the market. We need to be on the right side at the right time, and that means being on the right side of the closest largest number. And at the moment we are you know, on the negative side of this market. It's not to say that it will stay there, of course. We're still above top of group 1 according to the trading levels, so that keeps it into a bullish sort of pattern here. Yeah, so I wonder if I can look at this on this tick chart. Might be too short here. Just do some work here for a moment. So this is already at a 61.8% retracement level at this point here. So that brings us also into, just shooting the breeze here, brings us into the 400, which is a nice big number to work with. So we know that the 61.8 and the 400 is, you know, they're both, in this case, they're both important. So what we could say is that, let's just say that this came this also looks like an impulse wave that's not finished here in terms of 1 and 2 and 3 and 4 and 5 here. So if we move down through here, then it's also likely to have a little kick back here again. So what you could do is that, let's just imagine for a moment that it came down to this point here, then it's possible for it to move back. I'm just sort of eliminating all the possibilities here. So it can pull back to this point here. So what we could do, if it moved down through here at the 400 here, and I'll just remove this here now. So let's just say that it moved down through here. You would want it to retest the 400 and then fail from here. So we can put that across here. So you have to wait for it to move through the 400 and then go back and retest it. Now, all I'm saying is that it might pull back up to the 50-60% retracement level back up here before coming down again here. So that way you could put those two lows in play here and look to short it a little bit higher up through here. But be careful shorting it on the, you don't want to short the breakout because you'll get trapped in the retest. So I'm just going to clear this up here for a second. So you've got the general sort of picture there. You really want that 400 on your side here in working this, because we need to be doubly sure. We need to have a bit of strength to say to us that we need to be long or short at this particular stage. So so this is really looking like wave 1, ABC for wave 2 here. Wave 3 is a bit short in here, but I've got to give it to it because it's part of here. So then that would leave, that's already quite high for a wave 4 retracement level, and I'll have to take it from there. So 38.2, it's at its 50, so I mean it's acceptable. So if we look at this as 1 and 2 and 3 and 4 and 5 coming down into this space here, then it could rally back up into this space before going down again. So it's a bit choppy and corrective in here. We're not really in a trend where we just need to be a little bit mindful of that. And we also know that this is the 61.8% retracement level from this move up here as well. But I am looking at this move up here as an A and a B, and then 1 and 2 and 3, ABC for 4, and then up for 5 here. So I am viewing this as corrective here. It's just that I don't have a clear impulse wave down here just yet, and an ABC back up. So a little bit like the last video that we worked, we knew that we've got a problem and we don't have a clear pathway for these markets, for the DAX just yet here with all of this here. But on the outset of this is that we don't go long unless we've got support on the 500. So we are looking for short trades while it's under here. Okay, so just bear that in mind. And the second thing is that if this is an A and a B and a C wave here, then wave C here is going to be much the same length as wave C here. So it's not really a good trend to trade as such. I mean, you can get in there, you know, and so on, but there will be a bounce off the 300 here. But the consequences for this is that if the S&P 500 here, you know, plays out here and actually does move down through here, then it's going to pull the DAX down with it as well, isn't it, realistically? So it could move past this here if I got this wrong as well here. So, yeah. So, in a nutshell, to recap, we're under the 500, we need to look for short trades. If we had support on 500, we need to look for the long trades. On the short side here, we may only get down to the 50-60% retracement level here, and even that said, we may only get to the 300 here. But that said as well, if the US markets do find this 2700 as a retested resistance, then it's also possible for this to play out further and move down here further as well. But I wouldn't be able to confirm that unless we had the 12,200 here, and the 200 is important because it's the pivot within group 1 of the trading level. So 100, 200 and 300, 1, 2, 3 of 12,000 here. If that became the retested resistance here, then it would be pulled down to the 12,000, and then we know that we would be looking for a new low at that particular point. So look, a very complicated situation that we're in. It's just we're in a complex structure, and then within that again we're also in a messy structure, so it's a bit difficult to be in that. The AEX, I reverted back to the same count as the S&P 500 and also back to the DAX here as well. One of the things that we were looking for here, we're in the same I've drawn this out the same as the DAX here, as an A wave, a B wave and a C wave coming down through here. I don't have a lot of confidence in this particular count that we're working with, but it's basically the best I can sort of muster up at this point. The other point here is that, of course, we don't want to miss anything within reason, and this top here, this is group 1 here, 30, so 500, 1, 2 and 3, 10, 20, 30 in this case is group 1. So we would have, now we've got that high above the level there, that would be a trigger to go long, but we can bring that down to this level here now, okay? But at the same time, if we were looking to go short, we would also be looking to go short here as well. We're also talked about last time as well is that the 528 here, if that became the retested resistance, then we could short that. Now, it did move through it here and it retested it back up, but it never failed from that point it came through, so we would always be looking for this scenario. So it only gave us half of the setup here, so then it just basically moved up from there. So that would have been the short trade under here if that had triggered here. So that's not the case, and we don't need that now, but it gave us half a setup, but it just didn't give us the full setup to get triggered here. So I'm going to remove that there. I mean, doing it that way it just gives you a safer trade, so to speak. So the move down here appears to be impulsive, so we can look at this being a B wave coming through here. So we could say the same thing again here if we wanted to short this leg down here, and it may even go further, but it may not. I don't know. I'm sorry about that. But if we've got this move down through here onto top of group 1 here, so it's likely we're going to get some sort of little corrective bounce here, okay? If that's going to be the case, then it's going to move through here, and then we can do the same again under here for the next safer trade coming in this way down. So in a nutshell, looking for 530 become a retested resistance for a move down, but remember A can equal C in terms of length here, so this would actually be wave 1 here, wave 2, 3 down to the previous low here, 4 here, and then 5 here. So it's not really leaving us much here, so I'm going to remove that segment here, and I'll just leave that at that. So I'll just save that, control save. So yeah, look, it's just one of those things. We're not in a good position to do much at this particular stage here, but do keep an eye on the US markets as such as well. So the FTSE is also in the same situation as well. I can't really offer a very clear pathway for here either in this case. So this is really messy in here. I mean, I can sort of guesstimate things and so on, but at the end of the day, it's more like an A and a B and a C wave here as a corrective wave, and then an A and a B and a C here back into this box on this trend line, and then wave C here, and then a move down through here. I don't see this as a trending market or trending situation to take advantage of. So if you're looking for a break, then this is a nice break to be had until we can figure out exactly where we are with this and how it relates to the US markets as well here. I'll just have a look on the hourly chart here. Okay, so I would have been talking about the 72 before as well. So in this case here, if the 72 becomes the retested resistance, we can move it down into this box here. I can see that this is an impulse wave down through to here. It hasn't really rallied. I can't put the B wave here just yet. You know, it could be done, but I was kind of looking at this being an A and a B and a C wave back up into this space here before moving down through to here. But once again, if this becomes a retested resistance here, the 20 to 72 here, that retest here is part of the process. The moving down is part of the process, as it is here. The bounce is part of the process, and the drop through is part of the process, and the retest is part of the process, and then that's where the trigger lies to go short. And if put it in, and if it clicks in, well then we're on our way from that point there. But there is a lot of support. If I just remove that here and not okay, so yeah, I mean this whole block here, that's a lot of volume turned over there, so that's going to reflect back over here. So it's not going to be a very clear pathway here. I'm not going to leave that here because we normally leave that there as a particular, you know, Fibonacci retracement level. But the thing is that it will reflect back over into this here. It will be messy at this point. So look, the same as yesterday, as such, or last time we spoke, we didn't have a very clear pathway for this particular count. We're in amongst a corrective pattern, and like I say, there's 11 or 12 types of corrections that can come out of that, and that's not really the problem. The problem is that this is all really sort of messy. It's starting to become clearer through here, which is nice. So let's just see how that pans out. There's one other thing that we can add to this as well, is that from this high to that low here, we can look at the upside here at 50-60% here. So we could say that, I mean, I wouldn't go long here unless we had 300 here, the top of group 1, as the support. So a bit like the DAX at the 500, we won't go. We have to look for short trades, even though we may expect a rally here. We're still looking at the short side of things for the time being. Alrighty, cheers.